Markets fluctuating from one extreme end to other extreme end. It was outright despair, panic, gloom and doom, let's say in the month of July or end of June. Now it's back to euphoric levels. Everyone is of the view that the summer correction has come and gone. Within a span of 3 months, we've seen two extremities of pessimism, and now I won't say the extremity of optimism, but yeah, optimism is certainly back.
Hi Nikunj, I think definitely markets are all-time high, but if you see this optimism which was there, let's say beginning of the year is nowhere there right now, even if markets have hit new high. And the very simple reason for that, I think we are seeing this headline index doing very well because of the sector rotation. Last year, I mean, to one of the laggard sectors which are now reasonably good weight, IT and pharma, did not participate at all. And in this last, 5-6 months, we have seen these two sectors participating and contributing to fairly large portion of the Nifty gain, and that's the reason I think it is looking very, very good. But if you look at the wider market, still the stocks are still fairly many of them are below 200 DMA. Participation is slightly narrow, slightly I would say restricted to some of the large caps and few sectors, and I think that's the state of the market right now. This rotation is at play, and also I think it clearly shows that the global, the worry on the currency side, which is helping some of these sectors, which I just mentioned, that markets are moving towards the defensive side, both in IT and pharma, kind of explains the nature of the market. But I think another positive which has been the corporate earnings. Corporate earnings have started picking up. By and large, we have seen a fairly good, robust corporate earnings. So as we move forward, it looks like things are going to be reasonably okay. After long, we have started seeing that. Liquidity side, I think domestic liquidity has been reasonably all right. It has not disappointed. Some point in time, market expected that probably domestic liquidity might disappoint. It's been very good and robust, and that's kind of added to the mood of the market. So I think as we pan out, I think we have some more uncertainties going on, especially around the oil embargo. If let's say around trade wars, if the Iran sanctions gets implemented, India has to watch, because the oil is single biggest risk for India. If oil continues to remain strong, and if it strengthens further because of that, then probably we'll have another problem to deal with. So I think this, coupled with some of the political uncertainty, will keep still market tentative and on tenterhooks. But otherwise, by and large, I think trend seems to be good, and the defenses will continue to kind of participate in the market.
Vikas, morning. I guess the election predictions have already begun. One of the global brokerages believes that it's actually going to be a BJP win, but a coalition BJP win. Modi is not going to come, solo in that sense. And CLSA believes that the markets have already begun to price this event. Do you also believe that somewhere now market men are taking those tactical positions, keeping the elections very well at the back of their mind? Or do you think it's too soon yet?
I think in politics, 1 year is a very, very long period of time to predict anything. Things can change very rapidly. If you were chatting or sensing the mood of the market only 3-4 months ago, it was looking pretty bleak. But I personally believe, and I have continued to believe for a long time, and I continue to believe now as well, that I think we will get a BJP government back. And I would say that I don't see a significant even drop in the strength of the BJP currently where it is. There could be a little bit here and there, but I don't think any drop would happen. And it's a long period. I think from next 1 year, I'm reasonably sure. I think the mood on the economic mood has already started changing. I think business mood will start will change. You will start seeing rural demand is fairly robust. So I think what so far noise you've been hearing, I think you will start seeing, in my opinion, getting converted into positive noise, which will help BJP to come back to power. So I am not believer of the theory that BJP will lose strength in the coming elections. I think by and large it will continue, and we need continuity. I think Indian economy needs continuity of the current policies, current government, and which I think is good. So as it gets clear, probably you might see that market might start factoring that in. Like it happened in 2014, much before the election, market started factoring reasonably good amount of victory. So that trend might happen, and if that happens, market will continue to rally because economy is doing well, and political uncertainty, waning away, will add to the strength of the market.
The cash market, the spot market, has just hit 11,600, and it's been a very impressive comeback from the Feb lows. I think 400 points, 12,000 would just kind of put us in a new zone. Vikas, what's the thought when it comes to where one can still generate that alpha in the market? I know some of the themes that you're propagating still have to do with the consumption space, but do you think that, now the conviction with the investment-led themes gets louder, or because of this political overhang, one kind of steps back on that, because you typically don't see as much spending activity in the build-up of the run-up to elections?
No, I think, themes don't change, honestly speaking. In fact, consumption theme definitely remains very, very strong, especially I think recently when government has reduced the GST rates, the tax collections have been fairly buoyant, and I do believe that probably the government will continue to, work on a path to reduce the tax rates further. So I think if that happens, it will only boost consumption. We saw recently in case of some of the white goods. So consumption theme, in my opinion, will continue to remain very, very strong over many years to come, including the year which we are in. But coming to the point of investment cycle, I think we have just begun investment cycle. It doesn't change very often. We have seen huge amount of investments being planned. And it keeps on getting added. Like just you would have seen recently, a lot of city gas, licenses were given. And if you put together the collective amount of investments which will happen over the next 5-7 years, is almost 2.5 lakh crores. Now, so these kind of activities are coming about. They will gain momentum. Many of them have started gaining momentum. So I am not a believer that's and these are multi-year, fairly long investment cycles. We have just begun to see both. Public side obviously has been around for some time, but even we have beginning to see on private side capex picking up. So I do believe that India will be fairly balanced both on investment cycle as well as the consumption cycle. In fact, one of the interesting thing which is picking up which gives comfort to most of us is also even on export side we are beginning to see, given where the currency is going and also what's happening in China, a good uptick on the export side. So I think what we are going to see over the next 4-5 years is a fairly balanced all-round growth of investment, consumption and export, and which is a very, very good situation to be from any economic perspective.
So Vikas, Nestle is at 55 times, HUL is at 50 times, others may be at 45 times, 50 times. So is there a case there consumption businesses will grow but consumption stocks will not will give you a return? It's like saying the need for healthcare, need for pharma, need of consumption in India will always remain. So these are great themes to talk about because these are evergreen themes, but some of the names may not be good stocks to buy because the investor looks for returns and returns may not come in.
It's a fairly valid point. There is no doubt on that. So that's why stock picking has to be very careful. I think for some of the large expensive names, for them not to give return, they have to be derated, and the derating typically happens when the growth wanes away or some sort of competition comes in or margins kind of contract. It looks like currently the way we are going to be in a strong demand environment. If that is going to continue, unlikely that they would have either less growth or a compression of the margin. But anything can change. The point I am saying is that derating probably might be the reason why investors are ready to pay higher rating, higher valuation, because the comfort is there at least for 4-5 years. There should be good runway ahead, and post that derating can happen, and hence probably at least it's good to own for next 3-4 years. But having said that, I do agree with you. I do believe that some of the names have been on a fairly expensive side, and one has to be very careful and evaluate risk reward of investing into them.